Of the millions of taxpayers who filed their 2020 taxes, a handful of unlucky ones may have their returns singled out by the IRS for an audit. Yahoo Finance's Denitsa Tsekova joins us now with the 5 red flags on your tax return that can trigger that dreaded audit. Denitsa.
Yeah, so before going into the red flags, it's important to say that the latest data we have for audits, and this is for 2019, is that the audit rates is the lowest we've had in 20 years. So when it comes to that, the chances of you getting audited are low this year. But of course, we don't want to get to that stage. And there are quite a few red flags, and some of them are avoidable. The first and the biggest one is excluding income sources or reporting small amount of income than you actually receive. So if you just forget a form or you unintentionally leave out some of your income, you may not be hearing from the IRS. But if there is a big discrepancy between what you made this year versus what you reported on your form, you may be getting an audit. A second red flag is tax deduction. So overstating your tax deduction can be a big issue. So this is both for business tax deduction. So if you deduct meal and entertainment expenses, this could be an issue. And personal ones like charitable donation can also trigger an audit. So the IRS kind of knows what is the average deduction and average donation based on your income bracket. And if there is a huge discrepancy between what the IRS expect you to claim versus what you do, it automatically triggers their filters. A big red flag is also being in a higher income bracket. Obviously, this isn't something you can control, but you have to be aware that if you're a high income earner, the chances of being audited are much higher. So if the basic rate is 0.6%, the average one, if you're making between $500,000 and $1 million a year, you're twice as likely to be hearing from the IRS. And when it comes for people making above 10 million, that rate climbs to 6.7%. So the more money you've made that year, the more likely you are to hear from the IRS. And then another red flag that is kind of easier to avoid is if you're maybe separated with your spouse and you claim the same dependent, you have to make sure that both of you don't claim it on your tax returns. Because if you duplicate that, you'll be hearing from the IRS. And one of the last ones we looked at is foreign financial assets and income. You have to declare this, you have to claim them. And if you don't claim them the right way, or if you claim smaller amount than you actually have, you will be hearing from the IRS.
And we don't want to do that. We never want to have to hear from the IRS. Denitsa Tsekova, thanks so much for those tips. Appreciate it.